Yeah, we go again today. Uh, Good evening. Yeah, this is Mo, True Mo. Yeah, I would like to talk about. It's okay to talk about what we call the market outlook, which posted that was yesterday. Okay, first and foremost, let me go by introducing myself. My name is Mike, and the purpose for this platform is to help newbies like me in the trade, like in the forex market. Okay, so it's just gonna be like a platform for us to educate ourselves. Okay, on we're not giving up. Okay, on our dream and our goal or whatsoever we aim to achieve. Yeah. So I'm not a financial expert. Okay, I'm not at all far from that. But with the little knowledge I'm having, I would share it on this platform so that newbies, new traders like me, and the ones yet to come, okay, would like, they'll watch them, get some one or two things from. This is gonna be unfiltered, like this is raw, okay. This is what you'll be getting raw, like no editing. This is raw. This is how it is. This is raw, okay. Okay, on I think yesterday I think I started with GBP, okay, yeah, and how it would go, okay. So there is a saying that everyone can analyze the market that's played out. Okay, anyone can analyze the market that's played out. Reason being, once the market played out, you can just draw your either your trend line, your support and resistance level. If you use ICT, like you can draw your order block. If you use break and retest, you can use all your what's it called your trading what's it called strategy after the market is being played out. But this screen here, I shared this screen yesterday for us to look at what the market will give us this new week, the week that we are in currently in right now. And you could see that okay, yeah, the whole thing is happening like come like it's like you seeing the whole thing before it happened, and that's what this platform is gonna be about. You see, you see it before it actually happened. It's like you foreseeing something. Okay, open this GBP, right? You see the trend line, right? Definitely, Okay, see, I wouldn't start from what is candlestick. No, 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 no. I wouldn't do that. No. But as time goes on, okay, when I get uh, you guys a response on what you want me to talk about, then I will come back to those stuff, those things, okay? Because you could be able. I just want us to, let's just take it this way, yeah. Take it like okay, you are a newbie, and you are just seeing, we are just hearing or coming across trading for the first time. Okay, it's just the buying and selling of currencies. Okay, for example, let's say you are traveling to uh, Ghana and you stay in the US. Definitely, when you get to Ghana, okay, you have to change, their currency to cedis. Yeah, so that is what forex is all about. That's how best I can simplify it. Okay, I'm not adding other factors and stuff now. It's just currencies. You see, this is GBP USD, that's a British pound US dollar. So enough of all these let me talk. Okay, so now let's dive in. Okay, we have our trend line here, which is this green line. Okay, the down, the second touch, the first touch is down here, the second touch is here. Okay, and the third touch, see, it bounce back. The third one cross but bounce back. This break this. Like the market will go up, the market will never close now below, now they not at all. Okay. With this, it's telling saying nah, okay, the market is trending up, okay, it's trading up, but now it's changing gears. So it's going downward now. It's time to seek liquidity. Okay. So there is, as time goes on, I will break things down for us, to understand. Okay. Step by, I'm just building this video I'm doing right now, it just to just like explain the outlook which I did yesterday. Do you understand? All right. So before yesterday, I think the market was somewhere here or so. You see, poof. And don't forget, today is what? Today is I think today is Tuesday. Okay, I'm sure by Friday there'll be news. I think there was a news for all of this. That's why this whole thing happened. So once candlestick break down like this, my brother, my sister, just believe that okay, now the market is changing there. Liquidity graph on your liquidity graph for your liquidity. So it took liquidity from 1, 2, 3. This is a strong bearish candle. Strong bearish candle on 4 hour time frame. See all these rectangles I've drawn on this chart. You don't concern yourself about that for now. Okay. So now let's go to, I think I talked about GDP. I go to GDP now. Really, I think this, yeah. I also watch this. You see, let me. Okay, we have bullish order block here. Okay, market tapping here. You see, 1 hour order block, 1 hour fair value gap, which is the blue. Okay, and this other light print is this very one is the order block. Okay, on 1 hour. Right, if I go down, let me go down to 1 hour. You appreciate it. Okay, so the order block, I will explain what order block means and how you can map out your order block. So this is a fair value gap. This, okay, let me just this place. This is a fair value gap. Let me give you a color this way. Yeah, that is the fair value gap during the 1 hour time frame. Here is the time frame. This is the 1 hour time frame. Okay, so fine. So the market tapped into this, yeah. Market tapped into this, and what happened? The market came. You see, look at this, okay. This is my Fibonacci. Okay, this is my Fib. All right. Market tapped into the 50%, and what happened? The market declined straight up. I was even hoping the market even come close, let's say 62 or to 70%. But initially, if I'm in this market, if I will, definitely I will enter once it's 50%. Okay. But like extreme, sometimes you want to like let the market play out the stuff. But this, okay, this is telling that now the market is changing gears. Just so this one, don't let me talk about it much. So that's what happened here. The market came down to this 1 hour fair value gap, and is unable to break the what's it called 1 hour order block. Then it went back to the range from this high. You see where I put liquidity, the dollar sign over here. This is also an order block. Okay, the market came back into this region, and the market will decline, keep declining. All right, declining. All right, so there's something they call support and retest. Support level, demand level, then stuff. Support level, resistance level, then stuff. So later we'll get to that side. So this area here is a resistance level for the market not to go above. Other here, that's to decline. So cool. All right, so let's move down. Okay, see what happened here. You see, so I map out this support and resistance level. We have relative equal highs here. Okay, this relative equal. As time goes on, we could dive into it. But what I want you guys to know is that I want to see what the thing I saw before I kind of map out what's it called, the whole thing. Okay, so I'm like, you see this down here, this one here, and this, these are the support and resistance. Okay, I'm like, when this market break this, definitely it's going to work. Phew, sell off. All right, look, let's move to our left hand side. Let's see what we have here. What do we have? We have order block. We have what's called okay, this fair value has been mitigated already. But I want you see how this can be chopped here. All right. There's a reason for that. Okay, there's a reason for that. So this area is a key area for a trader to note. Okay. So as time goes on, we are going to dive into all this stuff. All right. So that's why I map this out. Okay. The other one, this down one is on 4 hour time frame. Let's go to 4 hour time frame then. Let me see what happens. Okay. So over here, this is the highest high that caused this low. The highest high that caused it. This high gave birth to this low, and this low gave birth to this high. This high gave birth to this low. This low gave birth to this high. Like that, sir, comes down. Okay. These two here, there's relative equals I here. So which there is always liquidity there. Anyway, it's relative equal I's, there's always liquidity written there. Liquidity is like money, not like it's money. Yeah, liquidity is money. Yeah. Okay. So when you let's just draw something here. This is a 4 hour order block. Let's see what happens. You see the market even pierce it downward into this imbalance. Okay. This will be attended to later. We'll talk about it as time goes on. So this is unfiltered. Like yeah, this is now unfiltered. So everything's gonna be raw. Alright guys. So we move to the base, okay? See what happened here. You have 4 hour order block. You have imbalance here. And this imbalance is being supported by what? Another order block, which is the bearish candlestick. Okay, this bearish candlestick here. Alright. Alright. That is what is preventing this candle from going down to this level. So it's like this is where the big people, like the big boys are. They are telling you saying nah, the market won't go below this. So like the buyers are saying that oh, the market won't go below. See, in the market we have buyers and we have sellers. Okay, we have the bulls and the bear. So as time goes on, we dive into that. So this is just, as I said earlier on, very to just understand what I saw in the market, what I've noticed in the market before, and map out all of these stuffs here. Okay. We have a swing high, swing low, swing high, medium swing high, swing low, swing high that took out this liquid, which causes break of structure. And what happens when you go to 1 hour, that's when we see there's a fair value gap there. Let's just go there. Okay. Let's go there. See, we have a fair value gap here, 1 hour. Alright, which is this space here. Okay, we see what happened. The market respected that. And we have this place is our resistance level. The market not going there. So like what's it called? Passing this range. Alright. So above this, there's money sitting, there's liquidity sitting there. Alright, there's liquidity sitting there. Bank. Vault. Let me use the word vault. Yeah, that is vault, in the bank where they save money, okay, it's vault, yeah. So there is vault there. That is where the actual money is. Alright. So you see what happened, the market clears down, that's you see, and map this out. The market will come here, it will go up. Either it comes here, then go, or it's going down, comes, then go up. So now let's go down. Let's check this out. Yeah, I didn't work on this. So I didn't work on this. I didn't work on this. Here's the card. Yeah, here's the card. You see what I did here. If it breaks this level, money is going up. So what happened into this fair value gap. If I stretch this out, you see all this map. I don't just mark them out because I fancy them. Nah, there's a reason for them. Okay, every candlesticks, everything you see on the chart, when you watch your left hand side, you stretch it out, you you allow the market to play out, you really understand that every single candlestick that prints on your screen, okay, there is something that is telling you any level the market is or the prices, there is something there. So it's something that we have to talk about as time goes on, you know. Okay. So assuming the market can like comes down to this level, they're meant to go up. But the market is saying, nah, I'm not coming down. I'm doing what I'm going up. But the market respected this fair value gap a little bit, you know. Like the market didn't close. I think the market closed above it. Let me see my 1 minute. Okay, this is the fair value gap here. 1 hour fair value gap. Oh yeah, the market closed above it. You see, market decline. Okay, but sometimes you want to trade this kind of trade here. So you see a bullish candle closed above fair value gap on higher time frame. It's a key that you need to note. It's a key that you need to note. So okay. So let's move to this one. CHF Damas, okay. You see what I think? Okay. I said when the market gets to okay, like, looking to liquidity, when the market went and continue going high, even this 15-minute fair value gap example, they took it out. See the other block, phew, market there is just going on. Sometimes it happens. This one like this, if let's say I play this trade, I would have even like I definitely the market will stop me out because my stop loss will not be more than 20, 30 but this will be more than that. Let's say I put my stop loss here. Okay, let me for example, let me just put I'm coming to sell from here. I put 20 pips stop loss. Let me put it, let me okay. Let me just say I'm even using 30. I want to go extra 30. This 31. The market already stopped me out, right? So I'll take a loss here. I say I'm this is 1 into 3. Okay. So this one like this, I'm targeting that. Right now the market will take me out. Okay, let's also say okay, we are coming here. I'm like, okay, the market break it. All right, let me say okay, I'm like, well, I'm sticking to my strategy. All right, I move the markets here. I say okay, when the our market will never break in 15 minutes other block, then things. Okay, I put them here. Let's say I even put it in the middle of this 15 minute other block. Market also take care out because down there it is normal. In the trade, you definitely have losing trade and you also have winning trade. But make sure that your winning trade is more than your losing trade. Okay. So now, after I yeah, I show you this because I showed you because that I was on this trade since last week. Yeah, I dropped to volatile region, so I left the trade home. So, see, the liquidity is here, the market infographic. Liquidity is here, the market infographic. What is there? So what happened? See, you see what happened here? I mapped this out. It's already there. Okay, in a support level for the market to go back into this region if it breaks. Okay, that's the thing. If the market comes down like to this liquidity to this level, market will be traced back before the final, TP, before the final liquidity sweep. Can even go all the way. Can even come down to this way. Why 15 fair value gap here? Around down here. Okay, if we go down to 15, we find it. Excuse me. So you see what I saw in the market, what I looked for in the market before I even entered the trade. But sometimes the market doesn't go according to how you've planned it. So you have to be able to blend in. Sometimes you've seen the right chart pattern, or or you have a solid entry like support and resistance level that was like penetrated by some bullish candle be like that. But the market you can even print another bearish candle straight after. So you just have to know how to blend in. Okay. So let's do Euro AUD. Card. Euro AUD. I think I didn't touch. I didn't. We have rated people eyes. Oh, good. I think this is where I ended stuff yesterday. Let me check this. Okay. This was previous. I think I didn't touch about it. Okay. I think this is where I stopped. That was last night. Okay, guys. Please don't mind me. Okay, I'm new. Okay, I'm new. I'm new. So please, I'll work on the best presentation ever. Alright, but for now, let's just take it this way. Which, and these are I want it to be raw so that you see know, how really it is. Like, I don't have to sugarcoat anything. Okay, so looking at this, we have relative equal eyes. Yeah. But what happened? Yeah, it's what I did. What happened there? This now. See, said it will come down right, but market even went ahead. Definitely, if I'm in this trade here, I'll put my stop loss above this high. Definitely. But you see what the market is? The market still will stop me out. Because there's liquidity sitting here. There's liquidity sitting here. So the market came there to to suit this liquidity. Okay. Then market decline. You see? So there is an order block here. Okay. There's an order block here, which is this black candlestick here. And when we draw the range, let's draw this candle out. That's why it's good to always look on your left when you're trading in the market. See, this is an order block. If I put my stop loss above this, I just give like 10 pip or let's say 5 pip above this, the market will take me out. Like, yeah, but if I put my stop loss above the eye of the wick of this black this bullish candlestick, I'll still be in I'll be in profit. So let's just take a range here. Let's take this range. Let's do let's click on this page. Let me speak. Alright. Let's do something like that. Let's say you want to enter this trade. Alright. So this is 50%. This one, this is 50%. This is 62, this is 70, this is 78. If you enter from here, Charlie, you have like a lot of people. Like if you have that what's it called, that strength there, you can let's say that would be like whoa, that's 56 point, and that's let's say 57 pips. Oh, now that's too much. I wouldn't risk that. So what I would do is this. Okay, let me do this. What I would rather do is I rather take this. Okay, I rather take this. Then the reason behind me taking this, okay, I will explain it later. I used it because this is the leg, okay, and this market have to trade back into the premium, sorry, into the discount where we are before it will go down to the premium, okay. So now I'll put my trade somewhere around from 50 to what is it called to this 100, okay. But no, by so doing, I'm not going to put it on this 100 because I watch back to my left hand side. I'm seeing this bearish order block, which is this black candle, which is the bullish candle here. Okay, that is where I'm going to put my stop loss. And I wouldn't enter what's it called around let's say 50%. I might just like put let's say one trade in, I can put one trade in, allow the market to go in, like to pierce in a little bit, to go into more discount zone. Okay, I might also add more what's it called more what's it called positions, like maybe 2 or 3 more in this area. But in my mind, when the market pierces this what's it called order block, it's okay, but it shouldn't close above this. That is it. When the market closes above this, I'm closing all the trades. So with this knowledge, you are cool. So if assuming I put my stop loss above this high, this bearish candle here, I can put my stop loss there. Don't share, I'll be stopped out. I will be stopped out the market. So that is what that's just a breakdown of what I did I saw in the market yesterday. And okay, let me just do this then. Let you guys know. Um, let me explain so that you guys will understand why the reason behind uh, my drawings on the charts and stuff. So, all right, I will still say thank you. Yeah, thank you very much for listening to me. Thank you for being here. We are going to learn and we are going to like come out of 95 because 95 currently that's what I'm doing. That's what I'm doing. That's what I'm using even to fund my accounts, my challenges and stuff. Still not totally being like profitable, but the faith is there, the belief is there. So we are not giving up. We are not giving up. So we have that belief, we have that faith in ourselves. You know, yeah. So we are not giving up. So and I say thank you. So this is just the what we call the breakdown for what I did yesterday. So thank you very much, everyone. Thank you for listening to me. Bye.